Hi traders, welcome to Harvest Money's Trading Risk Reward versus Profit Calculator. Before we get started though, there's a couple of things we just need to cover. The information presented in this video is for general information purposes only. Your personal objectives or financial situation or needs have not been taken into consideration. Accordingly, you should consider how appropriate the information is for your own personal objectives, financial situation and needs before incorporating it into your trading plan. By assessing this video, you're deemed to have read and understood this disclaimer. If you need a little bit more time, push pause on your video. Remember, past performance of this product should not be taken as an indication of future performance. Caution should be exercised in assessing past performance. This product, like all other financial products, is subject to market forces and unpredictable events that may adversely affect future performance. Remember, there's a risk of gaining money every time you take a trade, but there's also a risk of losing money every time you take a trade. We are trading futures utilizing margin. Margin is defined as the trading of securities with borrowed money from a broker. This has the effect of allowing you to trade a larger position in the market than you would otherwise trade based on your account balance. This has the potential effect of magnifying any profit you make from the trade, as well as the potential effect of magnifying any loss you make on the trade. This is why the term high level of risk is used to describe futures trading. A degree of leverage can work against you as well as for you. Before deciding to invest in any futures trading products, you should carefully consider your investment objectives, level of experience and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all risks associated with futures trading and seek advice from an independent financial advisor if you have any doubts. Now let's take a look at the Trading Risk Reward versus Profit Calculator. Just as before, the first thing you have to do is pull down the drop box and select the market that you want to trade. Pre-fills out your tick value for you so you can move right down to the next question. What is the percentage of winning trades from your last 100 trades? Now you all know that we asked you to do 100 trades, especially before you start a live account, so that you can check and make sure that you've got a viable trading plan. So that's why we've given you this calculator, so you can just go back to your last 100 trades, have a look and see what your win-loss ratio was. So let's just say your win-loss ratio was about 65%. The next thing we have to look at is how many trades a month do you expect to make in total? Are you a one and done trader? Are you going to want to sit through quite a few sessions and try and get 2 or 3 good trades out a day? We have about 20 trading days a month, so if you're a one and done trader, you're going to be looking for about 20 trades. If you want a wee bit more than that, let's just say that you're looking for maybe getting 1.5 trades, we could put it up to 30. So let's leave it at 30 and move on from there. The next thing that you get out of your diary is what is your average stop loss for the 100 trades that you've got your 65% for. Remember, when you're doing your 100 trades, one of the most important things is that you stay perfectly consistent. You can't change your trading plan partway through your 100 trades because that means that the figures won't be valid. So if your average stop loss is 10 and we're on the S&P 500, let's just say that our average target is 4, a very common S&P target that I see a lot of people doing when they're doing their sim trading. Now if we scroll down, we can see what the results of that are. If we're just trading the one contract, we'd have 19.5 wins, 10.5 losses, 78 winning ticks, 105 losing ticks, with an average of 0.9 loss tick per trade, and we've lost nearly $500. So we can see instantly that this trading plan just doesn't work. So what do we have to do to fix this? Well, there's 2 or 3 things we can do. We can look at our target, we can increase our target, we can increase or decrease our stop loss, or we can get better at trading and get a better percentage for the trading style that we're doing. So let's just look at it being the S&P again. 6 is another very common target that I see taken in the live trading rooms. That puts you into profit if you've got a 65% win-loss ratio for those sort of statistics. $200 is still not a very good profit. I would say we'd want a little bit more in case we have a little bit of a down week or a little bit of a down month. So what happens if we increase our percentage of winning trades by 10%. Let's say we're getting 3 out of 4 trades correct, and that's what we're trading. We can see we have 22 wins, 7 losses, 135 ticks winning, 75 ticks losing, average of 2 ticks per trade, and we're making $1,000 a month. Now that's a great basis to launch from if we can keep that up. So we've just got to be sure that when we're doing our 100 sim trades, that they are exactly how we intend to trade when we trade live. Then the only variable we have is the market forces for each month as the markets change slightly from month to month. If we look at an even higher percentage, you can see that the profit wraps up with it. So what I want to do is look at I see a lot of people coming in and their win-loss ratios are probably around 65 to 70%. Just get that on 65. But they're running stop losses way out at about 18 on the S&P as an average stop loss, 16 to 18. So we'll make that 17. And their targets are still only 4. So if you're trading like that, you can see instantly losing month. So what do you have to do to make those figures right? If that is the sort of trading patterns that you're trading and are the targets that you're going for, we would have to increase our probability of winning to 81% just to break even. So you can see that with a 4-tick target, you need more than 4 winning trades to offset 1 losing trade. So this is a very important point that a lot of people aren't taking into consideration when they're trading. It means that in order to make a reasonable profit, you probably have to be trading very close to 90%. That means that you have to get 9 out of 10 trades correct. Most traders are going to struggle to get their ratios that high. So what I want you to be able to do, and I'm going to teach you in the next video, is how to reduce your stop loss to something a lot more reasonable. Have your target increased as well, so that we can then come down to a much more achievable win-loss ratio. When we achieve that win-loss ratio, it's going to be really exciting, because if that's the profit we make a month on 1 contract, we don't actually have to learn any more to increase to 2 contracts. And of course we see our profit doubles, or 3 contracts, or 4 contracts, or 5. The only thing that stops us is the size of our trading account and our ability to trade. So proving our system on the calculator, proving it in simulation first, I believe then gives us the best possible chance to be successful traders.